Are you thinking about buying or selling a home or are a real estate professional and want to keep up with the Twin Cities market, news, stats, and trends? Then come hang out with us for a little while. Hi, I'm Kirk Duckwall, and welcome to the Twin Cities Real Estate Show. I have Chad Priebe, Bell Bank Mortgage. Thank you for coming in again today. I'm excited to talk about what we're going to hit on today because we've been doing the show since 2012, or I've been doing it since 2012. Yep. And one that I've kind of done a few times is the psychology of buying, the psychology of selling. And I'm just like, hey, since it's just you and I today, let's do the psychology of financing.
I think it's a big one.
Right. And for those who are like, oh, I don't know if I want to hang around and listen to financing. Do you know, like, the average person spends more time shopping for a TV than they do their home mortgage?
Blows my mind.
Yeah, I know.
Yeah.
But yet that home mortgage, depending on what they choose, could save them $100,000+ in interest paid over the period of the loan. So, like, taking a little bit of time to educate yourself and make sure that you don't fall into some of the traps is well worthwhile.
Right.
And so today we're going to be kind of honing in on some of the perceptions, or maybe I should say misperceptions, we see a lot of people have about mortgage shopping. And this can cost them that tens of thousands, if not $100,000+
right.
on their mortgage. Or if nothing else, a ton of stress in the shopping process. Actually just ran into a buyer of one of my listings where they kind of fell into some of those traps, and it didn't work out so well. Luckily, we were able to straighten that ship and get them going down the right path. But
right.
it's one of those where you want to spend that time to educate. Now,
right.
as always, a lot of things that we talk about on the show, you can dive in deep with our Smart Home Buyer Guide. This is free. Go to TwinCitiesRealEstateShow.com under Publications. You can download that, as well as the Smart Seller Guide, our BRIX report, and a whole bunch more. Before we get into our topic, though, let's kind of jump into some of the news and trends happening here in the Twin Cities as far as our real estate market. So, new listings, we are starting to see that pace kind of slowing down now. We're in kind of the later part of summer, and that's pretty normal.
It's a seasonal shift, right?
It's a seasonal shift,
Yep.
yeah. So it is slower than the same time last year, but it's, in compared to pending sales, is still actually putting us in a positive inventory range. We'll talk about that in a second. So we were at 1,638 new listings coming into the Twin Cities market. That dropped off for the week ending on the 30th to 1,443. The most recent data that I have looks like that might be picking back up a little bit, which is going to create a little bigger gap in inventory more than likely.
Okay.
As far as pending sales, though, that did increase a little bit week over week. Not a ton. Went from 1,155 up to 1,171. So this is keeping our inventory pretty flat. Little bit of movement upwards. So it was at 8,114 listings, going up to 8,814 up to 8,830.
Okay.
So this is that time of year where things start to kind of peak, right? We've seen peak sale prices already pass. We knew that was coming with the slowdown in activity. Again, very seasonal.
Right.
Right. We see a lot of things that sometimes the media makes out to be these big changes and can sound very scary. What a lot of people don't realize is, like, our market right now is still stronger than it was, and not just sale price, but like on all trends, still stronger than where we were at the same time in 2019.
Okay.
But
that's good to know.
The big thing that we see now, though, that people have to get used to is 2020, 2021, and the beginning of 2022 were not normal.
Right.
At all.
Yep.
Right.
Well, especially with interest rates.
Yeah.
So I work with a lot of first-time home buyers like you do, Kirk,
yes.
and all they know are the 2.5% to 3.5%. Nothing against them, but an average market is right around 5.25% to 6%.
Yeah, and in the last 20 years, we've spent more time closer to 5% than we have 3%.
Correct. So it's an education piece for people, right? And what we don't want to get caught up in is, hearing things from other people, news channels, this and that. What you want to do is go out and find the facts for yourself. We're going
to talk about that in the next segment. Really,
Right.
how for figuring out like rates and loan products, how to do that without just relying on advertisements.
Correct.
How to do it yourself.
Right.
And so that way you really know the product that you're going after.
Because there's a lot of clickbait out there.
Now, talking about rates, we did see rates kind of move back up a little bit. They were approaching 5-ish.
Right.
And then in the last week or so, where are they sitting now?
Well, that's a good question. The volatility in the market is driving our rates up and down very sharply. And as we
record today, it might be different than when this airs on Saturday and Sunday.
And it will be, yeah. And not that it might be, it will be. And so over the last couple of weeks, we had the rates came down, let's say 5.125.
Yep.
We haven't seen that in a long time, okay? And then 2 days later, it jumped back up to almost 6%. Right. So now we're down in the mid 5s. So we're going to start seeing that. And what I really recommend for people watching is find your team, find your loan officer, find your real estate agent, and make sure you go through them for the information because it is changing that often.
Well, I know when we do our mastermind, the market sessions, that you're really on top of what economic reports are coming out and how that might affect rates positively or negatively. So having somebody who is educated is very important when trying to track how do you truly lock in on that best rate once you've kind of done the formula piece to kind of get to the product that you want to use.
Yeah, because there's been a lot of times where we get a purchase agreement in play. Looking at the market, if I see that it might make more sense to wait until tomorrow or the next day to lock, we're going to talk to you about that because just because the rates are this today, if the market's strong that at the close that day, the rates are going to get better the next day. So you want to work with someone that is knowledgeable in the market, not just today, but what's going to happen or what do they predict down the road?
Yeah,
because
well,
that can save you a lot of money.
Geeking out watching the yields and the predictions coming down from the mortgage market guide and things like that. So.
Absolutely.
So market meter, where we're sitting with that right now. So again, that's that scale 0 to 10, 0 being the most extreme buyer's market, 10 being the most extreme seller's market, at least for a majority of history.
Right.
We're sitting at a 5.76. And I had mentioned that right now we're doing stronger than we were at this time in 2019, where it was actually closer to a 4.5-4 range on the market meter. So what does that mean for a buyer or a seller out there is that's a stable market. Between a 4 and a 6 is a stable market range. You definitely notice those differences when you cross into that seller's market and cross into that buyer's market as far as that time on market. Talking about time on market, we are seeing that starting to extend out. In the last 3 months, we've seen the days on market almost double as far as average. All price points in the Twin Cities was at around 11. Now it's up closer to 22. We're going to take a quick commercial break. Like I said, when we come back, we're going to be talking about the psychology of financing. Check us out online, TwinCitiesRealEstateShow.com. We'll be right back. Our local sponsors are BRIX Real Estate, Network Title, Eric Bloomstrad and Chad Priebe with Bell Bank Mortgage, Structure Tech Home Inspections, James Tufson with Country Financial, along with Cregan's Construction and Grey Duck Staging and Design.
Hi, I'm Ruben with Structure Tech Home Inspections. Everyone knows you should have a home inspection before you buy a home, but we've heard of home buyers being encouraged to skip the home inspection in this crazy market to make their purchase offer more attractive. Now they're facing tens of thousands of dollars in unexpected repairs. I'm telling you now, don't skip the home inspection. Here at Structure Tech, we can get your home inspected quickly, and we offer a full line of services. Visit us online at structuretech.com to learn more.
Don't fall for the billboards or the clickbait. There is no such thing as today's rate. Mortgages and mortgage rates are individual to you. Chad Priebe and Eric Bloomstrand with Bell Bank Mortgage are here to show you the formula to get your best rate. Once you know this formula, you can mortgage shop with confidence. Find us online at chadpriebe.com. That is chadpriebe.com. NMLS 1462493, Equal Housing Lender, member FDIC.
Hi, I'm Kirk Duckwall with BRIX Real Estate and the Twin Cities Real Estate Show. Buying or selling a home is one of the biggest financial transactions people make. Before you make your next move, download our free Smart Home Buyer or Smart Seller guides to give you the edge in our real estate market. From deal hunting to knowing the right repairs for maximizing value, these free guides have it all. Check them out and more at BRIXTwinCities.com under publications. Welcome back to the Twin Cities Real Estate Show. Today we're going to be talking about diving into the psychology of financing. If you like this show, check out some of the past shows at TwinCitiesRealEstateShow.com. There we have the psychology of buying, the psychology of selling. So what do I mean by this? And it's the idea of, how do a lot of buyers or sellers think about this process, and how should they think about this process?
Yeah,
Some of this
very important.
Some of this is just kind of instinctual behavior, like, well, I think I should do it this way because it feels right, versus the actual right way to do it, right? So we're going to be kind of breaking down some of those misnomers and some of the proper ways you may want to approach this. But you brought up a point during the break, Chad, which was, that you would rather be a buyer today, even with the interest rates being higher. And I couldn't agree with you more. And I actually I was talking with one of our past clients and gotten this discussion about, today you have the possibility to negotiate, right? And you could very well get a house today for $25,000 to $50,000 less than somebody who purchased back in March, back when we were saying, hey, wait, just hold tight. Unless you find that perfect deal, don't get involved in this gasoline on the fire. And at the end of the day, you might be making a little bit higher payment, but let's say you're the average home buyer, especially first-time home buyer. You're the average first-time home buyer, and you buy this house, and you're only in it for 3 years, that you now owe 50 G's less on that house than the other person who was more just get it now, buy it kind of mentality.
Well, and you've probably got a home inspection done, right? Which checked out the sewer lines, major components of the property. You feel more comfortable, more secure about making that purchase. Yeah,
your payment might be $200 more a month, let's say, than the person. But you got to weigh it all out, right? 50 grand less. Okay, rate's a little higher. Maybe the payment is higher overall, but at the end of the day, you owe that much less money on the home. So that's a fun little exercise to do. You can obviously do that with some of the payment calculators out there.
Well, which gives you more of a return when you sell.
Yeah.
Right? That's the whole point of buying real estate.
Well, they always say you make your money on the buy. Right? You make your money on the buy.
Correct.
If you buy smart, that's setting you up for success when you sell.
Exactly. So that's a big takeaway right there.
So let's get into first topic, when to apply. Now, a lot of people and a lot of advertising, it's well, I know I'm qualified. I get my Experian reports. I get my Credit Karma. I know I'm good. So I'm not going to apply because it's going to hurt my credit. I'm going to wait until the last minute to do it. And there's companies that try to take advantage of this because the person sees house. They then, crud, I need to get a pre-approval. I'm going to go online and apply.
Right.
Now that obviously maybe they get a higher rate, or they get, 1-800 service line or whatever it may be to go. What's the right way to start this off?
Yep.
And break down. I know I throw a bunch of misnomers in there. So.
Yeah. No, that's a good point you brought up, Kirk. Here's what I'm going to say. It's never too early to start the process. Okay. And by doing that, it's going to allow you to become a smart home buyer.
Yep.
Why? Because even though the free apps we get on our mobiles that tell us our credit scores, those are not accurate. Those are good tools to use to show what's reporting on your credit report, but do not trust the credit scores. So when a lender pulls your credit, we're pulling TransUnion, Equifax, and Experian. We're then using the middle score to qualify you. But if there's any little thing on your credit report that we could see that you could fix to maybe bring your credit score up.
And when we talk about bringing credit score up, think about credit score up, rate potentially down. Better payment.
Correct.
And the more time that you have to do that,
yes,
the better.
Yep. I would say if you're within 6 months of even going out looking at a house, even online, get your application done with a trusted lender. Have that loan officer start working for you, looking at your credit, analyzing your pay stubs, looking at your job history, making sure your assets are in line to make this purchase. If they're not at the time of application, that's okay. But what your loan officer and your realtor are doing, they're your team. They're setting up you to be successful in the end. Okay? If you come to me and you say, okay, I found a house I love, we want to make an offer today, and if you haven't filled out an application, I'm still going to want to work with you, but you can run into like a firestorm in that situation, right? And then all of a sudden you feel stressed. You're then making decisions that probably aren't the best decisions for you. I know Zillow had a report they came out with a couple years ago. You and I both.
Yes.
I mean, we almost fell out of our chairs when we're looking at the statistics on what people wish they would have done differently.
Started the process early was one of the top ones.
It was, and like Kirk said earlier in the show, people spend more time buying a big screen TV than they do putting in the research for a home. Yep. Well, the big screen TV isn't going to gain you any equity.
Home mortgage.
Home mortgage,
yes.
Correct.
Yes.
So do your homework. Absolutely 100% shop around. And I know
that was my next question. Yeah.
Yeah.
I mean, should somebody shop around? Because I know people are like, oh, well, every time I apply, it's going to hurt my credit more and more. Now, there's actually a given grace period, correct?
Yeah, that is a myth. You will get a credit inquiry on your credit report, but it rebounds very quickly. The credit reporting agencies know when you're shopping for a mortgage,
yep.
you should shop around.
Yeah.
Okay. It's not like when you're buying a car. When you go buy a car, that dealership's probably going to pull your credit 5, 6, 7 times. When you're looking for a mortgage, you go to a company, you get an estimate, you have them pull your credit, and then you go to a different company. You have them pull your credit, you get an estimate, yep. Maybe go to a third company, have them pull your credit, get an estimate, and then what you do is you circle back around. You have your trusted loan officer doing an apple-to-apple comparison on those numbers.
And that's the big thing, apple-to-apple comparison. So let's talk about how do you get that apple-to-apple comparison. This is the formula of how to shop.
Correct.
So a lot of people think how to shop is call up, ask what their rate is.
Correct.
The problem with that is what you need to look at, there's this thing called loan level pricing matrix,
correct,
which is basically that every person, surprise, surprise, is an individual, and that they have their own individual credit that will, and qualifiers that will determine what that rate is.
Correct.
So an advertised rate does not mean that's your rate.
Correct.
And you can Google search this, type in loan level pricing
yep.
matrix,
yep.
and you can see the adjustments that are having to be taken into consideration. And
yep.
here's a nuance on that. That is the suggested, if I'm correct, right? Which
that
means each lender could have their own standards on that pricing matrix.
Yes.
But this is why it's so important to shop. What is that formula, though, that they need to consider?
Yeah, that's huge. The formula to get to the best program
price
for you
yep.
or price for you. That's a big one. Individual.
Yep.
Don't go by what your coworker says they got their interest rate, or your mom or dad or brother and sister. Sorry, say that again.
Well, the formula.
The formula,
yep.
Pardon me. The formula to get there is going to be your down payment.
Yep.
What type of mortgage insurance are you going to be paying?
If you're paying mortgage
insurance. If you're
insurance,
paying
yep.
mortgage insurance, what type of property are you purchasing? Are you purchasing a single-family residence, a condo, a townhome, right?
Yep.
Once we figure out all of that, the term of the loan, are you going to do a 30-year mortgage, a 20-year mortgage, 15-year? Those all, and now we have ARM loans that we're talking about in today's market. Those all have loan-level pricing adjustments on those.
Right.
If you're calling a loan company and they tell you, and if you ask them what your interest rate is, and if they spit one out to you right away, be very cautious. That person knows nothing about you. Until they have your documents, your pay stubs, your credit report, your income asset documents, they can then tell you what the interest rate is, because by that point, you've probably figured out the term,
yep.
the down payment. You've figured out what type of mortgage insurance you want to pay, right?
How closing costs are being dealt with.
How closing costs are going to be paid. So there's a lot of factors that go into that formula that determine the interest rate.
Yep.
Okay.
And again, smart home buyer guide if you want this. So formula, there are a lot of pieces, right? Down payment,
Correct.
closing costs, mortgage insurance, term, all of that is playing into what your rate is going to be for that particular lender. So when you go shopping from lender to lender to lender, you want to make sure you have those dials set the same for each one of them. Then you're getting that true, accurate apples to apples comparison.
Correct. Yeah, that's a really good point you brought up there. So when you are shopping around from lender to lender, make sure you're getting the same scenario on that estimate. So when you go back to your original lender, they can go over and educate you on the numbers.
Right. And this is where you're going to start to see differentials. You're going to see that loan officer that didn't maybe actually put in the correct tax amount, or estimated a really low mortgage or homeowner's insurance amount, or something like that. Or you see that they have a higher lender fee.
Correct.
Right? Or you see that they're doing discount points to buy that rate down to make it look more competitive.
Correct.
Right? You can start to see these line items that you are controlling those knobs as the consumer, not them. And when you have that laid out in front of you, that makes it so you can really dive in. So got about 30 seconds before the commercial break, but things to really think about here. Apply right away. Don't wait. Shop around. It's not going to wreck your credit. And make sure you're using the formula. Don't just use the billboards or pick up the phone and call for rate.
Please don't.
If you have any questions, please give us a call, 651-303-0019. Again, you can always check us out, TwinCitiesRealEstateShow.com. We'll be right back.
Not every title company is the same. There are many people involved with each real estate transaction, and all of them need to be in the loop or a closing may get delayed. This is why the people at Network Title strive to provide swift scheduling and communication between the buyers, sellers, agents, and lenders. We know moving can be stressful, however, your closing does not need to be. Check us out online at network-title.com.
My name is James Tobson with Country Financial. Anyone can sell you insurance, however, is it going to be the insurance you need? When life pops up with its surprises, you want the right coverage. When it comes time to find or renew your policy, give me a call. I would love to review your existing policy and show you what I can do for you. You can email me at james.tobson@countryfinancial.com or give me a call at 651-365-3408.
Hi, I'm Becca, owner of Grey Duck Staging. With today's home buyers beginning their journey exclusively online, the look and feel of your home matters more than ever. Whether it's a simple in-home consultation, a refresh using your current furniture, or a whole home staging, our goal is always the same: showing your home in the best light and helping you achieve the highest sales price possible. To learn more, visit us at greyduckstaging.com or check us out on Instagram at greyduckstaging.
Welcome back to the Twin Cities Real Estate Show. Hopefully you enjoyed the last segment there. If you didn't catch it, you can check us out anytime at TwinCitiesRealEstateShow.com. There you can watch all of our past shows as well. So today we've been talking about the psychology of financing. So the last one I want to touch on, this is I'm not finding exactly what I want right now at this moment. I'm thinking about stopping my search, saving for another year, and signing another lease. Let's spin that lease roulette wheel. Okay, now what do you think of that idea?
Yeah, everybody's different, so it is individualized.
Yes.
I will say I don't know too many people over the 22 years that have told me that can actually come around in a year and do what they say they want to do.
Yep.
It's nearly impossible. And I like the idea. Like, I hear this a lot right now. I'm just going to move back in with my parents and save money and purchase next year.
The parents are like, no!
Right. and that's fine. You can do that, but you got to save about, I would say, what do you think, Kirk? What's the percentage?
Well, so we've figured it's about a minimum of $11,000 on average. The last 3 years, it's been more like $17,000 a year to just break even by the next year.
$17,000 you'll have to save by moving in with mom or dad or signing another year lease.
Yep. So
pretty hard to do.
By the way, so I went to this real estate conference and I heard a line there that I just loved. If people are worried about rate, remember, rent is 100% interest. So if you're worried about going from 2 to 3% and you're thinking of renting instead, you're going from 3 to 5%. You're going from 5% to 100% by renting.
Yeah.
So
it's not your house.
Right.
Yeah, you're
exactly.
paying for someone.
You're paying somebody else's mortgage.
Right. And by the way, rents have gone up quite a bit. So I think this all comes back to being a smart home buyer.
Yep.
And how to be a smart home buyer is knowing the formula, working with trusted agent and loan officer that will be able to tell you what you need to hear, not what you want to hear.
Well, and one thing I never want to be accused of is pushing anybody into buying a house, right? Because, people be like, well, when's the right time to buy a house? The right time to buy a house is when you find the right house.
Yeah.
Are there good times to be on the hunt? Absolutely. You can play the market a little bit, but you also don't want to be forced into it. But you can't find the right house if you're not looking for it. So, all right. Well, another great show. Thanks for coming in, Chad. If you want to check us out, all of our past shows, TwinCitiesRealEstateShow.com. Everybody have a great week. People always ask realtors, what is your commission? But what they should be asking is, what is your rate of return? Commissions only vary by a couple of % from agent to agent. However, the price per square foot you get just based on their experience and the quality of marketing they use can vary by 10% or more. At BRIX Real Estate, our agents use the right marketing and have the experience to get you top dollar for your house. See what we can do for you at BRIXTwinCities.com.
Not every title company is the same. There are many people involved with each real estate transaction, and all of them need to be in the loop or a closing may get delayed. This is why the people at Network Title strive to provide swift scheduling and communication between the buyers, sellers, agents, and lenders. We know moving can be stressful, however, your closing does not need to be. Check us out online at network-title.com.
Don't forget to check us out online anytime at TwinCitiesRealEstateShow.com. There you can find all of our past shows, our weekly market updates, along with the latest and greatest searching and researching tools, and our free publications to include the Smart Home Buyer Guide and the Smart Seller Guide, along with the BRIX Report. All of these free for you. If you have any real estate questions, please feel free to give us a call, 651-303-0019. Again, 651-303-0019. Happy to help answer any of your real estate questions or assist with your real estate needs.